It's almost time, folks. Tesla's We Robot event. Huge fork in the road for the company, just a couple of days away. So all aboard the hype train. Morgan Stanley have some thoughts. Tesla and Uber. Ahead of next week's 1010 We Robot event in Los Angeles, we feel investors' sense of anxiety around the topic of autonomous rideshare services. We wanted to share a few thoughts that both Tesla and Uber investors may want to be prepared for. By the way, I just want to take this moment to pass on my condolences to current Uber investors. But first, awkward silence revisited. Hard to believe how fast 9 years can fly by. During Tesla's 2015 second quarter earnings call, Adam Jonas, author of this note, asked Elon Musk what he thought was a simple, straightforward question. Quote, "Is this a real business opportunity for Tesla supplying cars to ride-sharing firms, or does Tesla just cut out the middleman and sell on-demand electric autonomous mobility services directly from the company on its own platform?" After a 6-second pause, Elon replied, "That's an insightful question." I gave him an out, saying, "You don't have to answer it." Fast forward to 2024. In Tesla's first quarter 2024 shareholder letter, we see the following comment. Quote, "We are currently working on ride-hailing functionality that will be available in the future. We believe the Tesla software experience is best in class across all our platforms and plan to seamlessly layer ride-hailing into the Tesla app." By the way, folks, a little bit difficult to see, but after some of the speculation regarding this, the We Robot invite, some of the patterns and the shapes and going down the whole tinfoil hat rabbit hole with those, a few folks pointed out that this was actually the same graphic we'd seen previously in motion in the Tesla ride-hail app. Hard to see here, but it's the same graphic essentially. Back to the note, what are we prepared to see? Most expect that attendees will be shown and given rides in a Cybercab on a closed course. Potential initial commercial introduction could be late 2025 or early 2026. By the way, they're probably right. Isn't it interesting to see the timelines compressing now? This doesn't mean that universally everyone agrees with these kind of dates, but they're basically talking about sometime in the next 12 to 24 months, which is pretty closely in line with my own estimates. Tesla Robotaxis have gone from pie in the sky, never going to happen, at least a decade away, to the next year or two. It is our expectation that Tesla will offer a dual approach with respect to autonomous ride sharing. Number one, the fully autonomous app-based Cybercab, and two, a supervised autonomous and FSD rideshare service. So I totally agree. There's going to be a dedicated wheelless, as in steering wheelless, pedalless Cybercab, dedicated Robotaxi vehicle that Tesla will definitely produce and at least operate some, if not all themselves. And they'll also allow users, as I've said in the past, to add their currently owned private vehicles to the fleet, part-time, full-time, and use those as well to supplement the dedicated Cybercab fleet. Most likely, we think the latter of these may get the most attention or have the greatest room to surprise investors, at least near term. Speaking of surprising investors, who else but James Stevenson posting this? Tesla cumulative vehicle production, which is pretty much a perfect proxy for vehicle deliveries and close enough to a perfect proxy for vehicles currently on roads, essentially all of which will be able to operate as robotaxis in the future, potentially with a software update. Tesla now having cumulatively produced approximately 6.9 million vehicles to date. The vast majority of these in the future, with an over-the-air software update, capable of operating autonomously. That's a massive fucking fleet. As of May this year, just a few months ago, there were 7.1 million Uber drivers on the entire fucking planet. Okay, so Tesla cumulatively produced about 7 million vehicles, and in total there's roughly 7 million Uber drivers on the earth. Just to give you guys a sense of the scale of Tesla's existing fleet. Now, inevitably, most of these vehicles presumably won't participate in the Robotaxi fleet, at least not for some time. But in the next 12 months, Tesla's going to put another 2-ish million vehicles on roads, and their production's scaling up. They've already signaled their intent to get to roughly 3 million units per year without doing major upgrades to existing facilities or production lines by implementing some changes. Suddenly, this is going to be 7, 9, 14, 16, 20 plus million vehicles on roads. Now you might start to understand why I offered my condolences to current Uber investors. Back to the note. In fact, we think the vast majority of rides and miles traveled in our Tesla mobility model through 2030 and into the early 2030s will fall into the FSD/supervised rideshare category, where vehicles are owned by individual drivers or third-party fleets. Morgan Stanley say that they're prepared for Tesla to unveil details at the event around metros, target specific metro areas in the United States with high density of Tesla owners in reasonably mild climate areas. on screen now. Just an example, a few years ago, roughly 50,000 Uber drivers operating in San Francisco, a once great city. Been there a couple of times, certainly in decline. San Francisco also happens to be woke central. A lot of early Tesla customers there, a lot of money, a lot of virtue signaling, a lot of climate alarmism, a lot of Teslas in that area. And because of this, Tesla has a lot of data and a great safety profile. You can watch many intervention-free drives happening in that same city, San Francisco, today. So keep this in mind. Wherever Tesla already has a high density of vehicles, they have a high density of data, meaning they have excellent capabilities. And in fact, I'll be surprised at this event, going out on a limb here with a prediction, if Tesla doesn't mention some approximate detail around the number of Tesla vehicles in certain regions, and then contrast that with the number of, say, Uber drivers or taxis. Because of the number of miles these vehicles can do in theory, because of the high utilization, you need a lot less vehicles on roads than people think. Again, we've already seen today that Tesla's fleet of vehicles already is roughly on par with the number of Uber drivers on the entire planet fleet. Tesla may share the sizes of its FSD Hardware 3 and Hardware 4 installed fleet by key metros and geographies. We estimate Tesla will have more than 3 million units delivered since 2018 in operation in North America by year end. And of course, you saw this coming, right? Take it with a grain of salt. I read it on the internet. It may not be 100% accurate, but recent estimates put the combined fleet of Uber and Lyft drivers in the United States at roughly 2 million. Meanwhile, Morgan Stanley estimate by year end, Tesla has roughly 3 million vehicles on roads. So again, I'm not saying that all of these vehicles will immediately become robotaxis. I'm just saying, look at the numbers and the scale they're already at. So once again, I would like to pass on my condolences to Uber investors. FSD Austin cut. Tesla just rolled out FSD V12.5 across its fleet and is beginning to roll out 12.5.5 in select models. I believe we heard that 12.6 is next month, maybe even this month now. I'm losing track, so many updates so fast. While we do not have specific knowledge, we would expect Tesla may be in a position to offer the very latest version of FSD, a developer's cut potentially, according to Morgan Stanley's speculation, to Tesla drivers conducting rideshare services on the Tesla app at a discounted rate, if not for free, when driving on the app. With the hardware already installed as standard equipment in the car, it's just a matter of enabling the software via an over-the-air update. The idea here is to expand the number of users in the FSD network. Morgan Stanley believed that would result in faster learning in terms of improved capabilities for the software, creating a more pleasurable and lower stress experience for the Tesla rideshare driver base, resulting in faster adoption. Driver economics and take rate. From our experience in covering Tesla over more than 13 years, by the way, I just got to take this opportunity to remind everybody, it's true, back in 2018, by the way, they had a bear case that valued Tesla, split adjusted 66, 67 cents per share. That was absurd and low-key. I don't think they actually believed it, but I think that they thought that was a great way to get a lot of coverage. And I'm still talking about it today, years later, so it worked. Morgan Stanley historically have been ultra hit and miss on Tesla. Some great, some terrible, and some average. We are frequently surprised with the creativity and forcefulness of the company's marketing tactics to help promulgate awareness and adoption of various products, technologies, and services. All the money-managing PR and marketing experts have left the chat. Uber's US rideshare take rate, percent of bookings, is estimated to be approximately 30% this year. Confusing terminology, but what they're referring to here is the cut of fares that Uber pockets versus the drivers. In other words, the drivers keep 70%, Uber takes 30%. We would be surprised if Tesla did not offer drivers a more attractive take rate, i.e. a lower take rate, to entice faster adoption of its rideshare platform. We would not be surprised to see Tesla offer a deeply discounted take rate for the first month on the platform as a temporary enticement. So, stranger things have happened, but I wouldn't be too sure about this. I think there's a lot of people who currently own Tesla vehicles, not the vast majority, but certainly a lot, who are aware about this opportunity being around the corner, and who will be all the fuck over it, and then be telling all of their Tesla-owning friends and family and colleagues and neighbours. Never mind how many people are currently feeling the pinch, economically speaking, looking for a little extra income. Certainly possible that Tesla may incentivize people to start offering rides on this platform, but geez, the odds of a 0% cut, I'd be surprised about that. To be clear, we are not expecting a Tesla FSD-based rideshare service to be materially different in price to the rider. By the way, I agree. Now, just to be clear, long term, it's going to be much more affordable, but that will take time. And initially, I'm not expecting Tesla will, but they could charge a massive premium. There's going to be a lot of early customers out there desperate to use the service just because it's Tesla. But again, I don't think Tesla's going to price differently or at a premium to services like Uber or Lyft. I think they're going to probably price roughly at the same point initially and then drive their costs lower over time. And then suddenly it becomes an absolute no-brainer. And then companies like Uber and Lyft can't compete, and then they ultimately go out of business. Rest in peace. We expect any potentially lower take rate to leave more money in the driver's pocket as Tesla looks to grow its driver community in a supply-limited market. And that is a fair point. Tesla likely to dangle a few carrots to incentivize some of their 7-ish million drivers globally to join the Tesla ride-hail fleet. Just how many Teslas are already in the Uber fleet? While not disclosed by the company, we took a look at data pulled from Uber's climate report from April 2024. According to Uber's data, approximately 8 to 9% of Uber's miles driven, the US and Canada, are in zero-emission vehicles. Or as Morgan Stanley have put it, zero-emission vehicles. With 143,000 active zero-emission vehicle drivers per month globally. Adjusting for the US market and applying Tesla's trailing share of the number of electric vehicles sold in the US, blah, blah, blah. This implies on the order of 50,000 Tesla vehicles currently on the Uber platform. And that's an interesting data point. Well done, Morgan Stanley, for figuring this out. What percent of those Uber drivers currently in Tesla vehicles are thinking, shit, Tesla launching a ride-hail network? Now, by the way, just to be clear, in case anyone hasn't cottoned on, Morgan Stanley are implying that initially Tesla's got to launch their own ride-hail network with human drivers in parallel with their dedicated robotaxis. Eventually, though, the human drivers are removed from the equation because Tesla solves autonomy at scale. Now, suddenly, the vehicles can drive autonomously, and the owner who previously had to trade their time for money by driving people around can now just send their Tesla vehicle out to print money. But just think for a moment. If there's 50,000 Tesla owners already driving for Uber, they're already familiar with this world. If Tesla launches their own ride-hailing platform, how many of those 50,000 Tesla owners currently driving for Uber think, hey, I might start driving for this Tesla network? And this is where there is some weight to Morgan Stanley's prediction that Tesla may offer an extremely good deal. I don't think it's going to be 0% take for Tesla, but compared to Uber's 30%, if Tesla's offering 20, 15, 10 initially, something like that, should be more than enough to convince many of these 50,000 Tesla drivers in the Uber network to jump ship. And now we're looking at Tesla's mobility fleet. These are estimates beginning 2026. So this is the first Tesla Robotaxi according to Morgan Stanley's estimates, 2026 in 1,000, literally 1,000 Tesla Robotaxis, 2026. By 2030, 158,000. 2035, around 1.69 million. Their miles per car beginning at 50,008. Now that's a lot. Relative to how much an Uber or taxi drives, though, that's super reasonable, but it is a lot. If this is an average per vehicle, this is assuming not far off full-time operation. And by the way, guys, if you want to see my own estimates for number of vehicles in Tesla's Robotaxi fleet by year, average miles driven, how much they're charging per mile, all available in my Tesla valuation model. Just join Patreon with the link in the pinned comment at the investor level or above. Now, I think that these estimates may be somewhat bearish, although miles per vehicle, probably not particularly bearish, but vehicles in the fleet, I think they're massively underestimating how quickly this scales. But regardless, let's do some quick math here before we get to Morgan Stanley's own estimates. Let's just take 2030, their conservative estimate, 158,000 Tesla vehicles. Miles per vehicle, by the way, peaking at around 70,000, which is a typical full utilization taxi or Uber. So just to be clear, 50,000 early on. Roughly a decade later, they're assuming that each Tesla vehicle in Tesla's Robotaxi fleet is doing practically an identical number of miles per year as a typical taxi does. For what it's worth, again, if you want to see the exact numbers, check out my valuation model linked in the pinned comment on Patreon. But for what it's worth, I also have a massive increase in miles per Robotaxi. However, I start at a lower point. My assumptions, many of these vehicles will be operating on a part-time basis. A lot of customer-owned vehicles are going to be adding to the fleet, and that's going to drag things down because sometimes the customers are going to be using these for personal use. E.g., while you're at work, have your Tesla going around, picking people, dropping them off. Maybe if you're having a quiet weekend, it can go out, pick people off, but you're going to have your own use as well. But like Morgan Stanley, I have miles driven climbing over time. And I do again want to underscore the fact that 70,000 miles per year is fairly closely in line with how many miles a typical taxi does. So this is just almost a like-for-like replacement. Seems reasonable, right? So let's do some quick assumptions here. Imagine it's 2030. There's 158,000 Tesla Robotaxis, each of them per year doing, let's call it 55,000 miles, each charging about $2 per mile. That's roughly $17 billion with a B in revenue. If Tesla were taking a comparable cut to Uber at 30%, that's $5 billion of profits in 2030, just a few years from now. on very conservative numbers. So let's look at Morgan Stanley's unit economics for 2030, the same year. The super autists are welcome to pause the video now and read in detail, but let's just cut to the chase here. Their estimates for each Tesla Robotaxi is $105,000 of revenue, roughly, for the year. Some maintenance. The short story, the profit, the net profit after all costs per year per Robotaxi, $14,691 per vehicle, giving them a net value of just over $250,000. Now I'm just going to say this one more time. Morgan Stanley are valuing each Tesla vehicle, which Tesla themselves is likely to be producing for, call it like $18,000 or so, selling for maybe 25 if they sell them, and if not, they'll just operate them themselves. Let's just round it up to say $25,000 to produce, right? Valuing them at $250,000, 10 times more than they cost to produce. Please tell me somewhere any examples where you can think of a company that could produce a product whose initial value is 10 times that which it costs them to actually produce, to manufacture. This is bonkers. Now, Morgan Stanley are estimating a $45,000 cost for each car. I do not know what they're smoking, but I hope they've saved some for me, because this is, what are you talking about, bro? Just to be clear, today Tesla's producing a Model Y for fuckloads less than $45,000. They're selling them for 45 grand with a fat profit. And they have things like steering wheels, pedals, and they're not built on the next gen platform. So this is absurd to me. I just honestly don't know what they're smoking here. $45,000 cost a car. Am I dumb? Are they adding all of the expenses? Is that what they're doing? Starting at 25 and then adding all this shit here? Like, I don't know. Maybe that's what they're doing. I just don't understand how it could compute otherwise. But the point is, Morgan Stanley, who are pretty conservative here, in my opinion, estimate that Tesla is going to be producing cars in 2030. Those cars in the fleet, we bring in about $15,000 a year in profits. And those vehicles will have a value per vehicle of just over $250,000. Now, the haters will hate, but I just have one question. What if they're even slightly right? Or imagine this, what if they're conservative in these estimates? So let's do an extreme example here. We're going to multiply the value per unit, is how much is a Tesla Robotaxi worth in 2030. And let's hypothetically imagine if Tesla were to produce in a single year 1 million of those vehicles. In a single year, producing just 1 million of these, and again, Tesla's already around 2 million units per year of vehicle production. They would have just, based on 1 million Robotaxis produced, have produced literally $250 billion worth of assets, the vehicles, in a single year at just 1 million Robotaxis in that year. Bonkers. You don't need to be very good at math to understand. You do that 4 years in a row, you're at $1 trillion fucking bucks. That's bonkers. But of course, as we know, Tesla is just a car company. It doesn't have anything that Toyota doesn't already have, and therefore autonomy is just a fake pipe dream and a stock pump, but it'll never happen, and you should totally ignore everything you've seen here because you won't regret it. See ya. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients. Plus, has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. And I haven't missed a daily video in more than 3 years. Must be a coincidence, right? Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1 year supply of vitamin D3 plus K2 and 5 travel packs. But don't take my word for it. This is what viewers of the channel had to say after trying AG1. I feel like I have a lot more energy since I started on AG1. By the way, viewer, that makes 2 of us. On to the next. Just got my AG1 in the mail. Legit feeling the effects after day 3. This viewer's been taking AG1 for 8 months and says, what an investment. Another. 3 months ago, I started AG1 and have been enjoying the evenness of alertness and energy that lasts the day. I just started the wife on it too. Are you convinced yet? I mean, hey, it's worth trying, right? Click the link in the pinned comment or head to drinkag1.com/SMR, or I can keep going. Plenty more to come. This viewer, after about a month on AG1, definitely a lack of fatigue in the afternoon. Pleasant side effect is that my coffee intake has imploded and is almost down to 0. One more? Yeah, why not? I honestly feel younger and will be continuing to use AG1. This stuff really is crazy good. I didn't think it would be, but this stuff is awesome. It really is what everyone is saying. One more? Don't mind if I do. I've just received my 3rd month supply. I've drank it every day. I have so much energy throughout most of the day. I'm productive, started a new business, started socializing, refurbished a boat. It's no coincidence. Thank you for your persistence, your integrity, and your insights. Now look, These are not my words. These are not my testimonials. This is what you guys and girls are saying. Maybe it's 100% placebo effect. But even if that's the case, I think it's money well spent. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs. If you're still skeptical, hey, I don't blame you. Everyone on the planet seems to be promoting AG1 now, but guess what? They weren't nearly 3 years ago when I had this to say privately to my Patreon audience before there was a relationship, when I was asked about what I was doing for my health, energy, and so on. Just sharing my genuine, honest thoughts about a product I'd recently discovered that was at the time called Athletic Greens, now AG1. If I could only recommend one supplement to take, Athletic Greens, and I'm not getting paid to say this, Athletic Greens is a fucking game changer. I cannot believe how effective this is. No longer having a lack of energy in the afternoons. It's fucking amazing. There's only one thing to recommend, seriously. Try Athletic Greens. You won't go back. So obviously, just like Elon Musk is a liar, a fraud, a con man, a scammer, a fake engineer, and Tesla's going bankrupt, you shouldn't trust that guy from about 3 years ago who, without any financial incentive, was promoting this product to his audience on Patreon when they were asking about health and what he's doing for supplements. Because obviously, there was some other reason he recommended that, obviously. Not sure what it was, but don't trust that guy. And all the testimonials, like my mental game has improved with AG1. I feel better than ever. I'm so impressed I've bought it for both my parents. I feel more focused and have better digestion. Incredible difference. No more afternoon fatigue. It's relieved gut issues. These are all just obviously fake testimonials from fake people. Right? Wrong. Just try it. Unless you hate yourself. If you hate yourself and you don't even want to risk possibly feeling better, this is not for you. But for everyone else, what's the worst that could happen? Try it for a month. See how you feel. It's a no-brainer. Just click the link in the pinned comment or head to drinkag1.com/SMR. You'll get a free 1-year supply of vitamin D3 and K2 plus 5 travel packs. And you'll take the colossal risk that maybe you might have a similar experience to some of the people whose testimonials we've read in this video.